we had a deal that was, and I had never looked at deals this big before, but we had a deal that I liked that was $45 million bucks. So that was one of the deals that I showed his father-in-law. And his father-in-law was like, what's a good deal? If you can get it, let's do it. And that was a $15 million down
And you're like,
payment.
wow.
I know. And I was like, this is crazy.
Yeah.
And I was like, all right, let's see. It ended up going like above what we wanted to pay, that deal.
Okay. Welcome to the Deals and Aloha podcast, where we talk about real estate deals, hope to leave an lasting impact on our audience, and of course, spread aloha.
Always.
You can find us on all social media platforms at Kamohai and Tristyn. Please please like, subscribe, and share. Let's go.
Let's go. So today we have Drew Breneman from Breneman Capital. He is a multifamily investor with humble beginnings, self-made, and he also is the host of the Breneman Blueprint podcast. I'm excited to hear your story on how you started, and now you have over 200 million
Plus.
Yeah, plus.
Yeah.
As like key principal sold GPs, which is amazing to us. I think we're always pretty selfish because we bring people on the podcast that we're interested in learning what you guys know. You know what I mean? So yeah, thank you so much for being here. I know you're on vacation right now.
And shout out to our editor because he connected us.
Yeah. So we use the same person. That did our
Small
podcast.
world.
And,
So I mean, just let's jump straight in. How did you get into real estate?
Yeah, so I started an internet business when I was in high school, just reselling items in video games. So I was playing Diablo 2 and then the other games that came out, EverQuest, World of Warcraft, and you could resell items in these games for real money.
Oh, nice.
So that's what I did. I was basically just flipping things.
Yeah.
So if like nowadays the modern version of that would be just doing like Amazon drop shipping.
Yeah.
You know, where so all I was doing was just finding an item in the game when it was selling cheaply for let's say $5 and then reselling it on eBay or my own website for 10.
Crazy.
So you're an entrepreneur from young days.
Yeah. I mean I did I was a magician before that and did kids parties.
No way.
You didn't really make a lot of money doing that. You know, you do one show for $50 on a Saturday.
Yeah.
You know, but this ended up being the first like endeavor where I was making real money, and in any one sale I didn't make a ton of money, $5 or $10, but I ended up doing thousands of transactions, like
crazy,
somewhere between like 5 and 10,000 transactions.
And for a teenager, that's a lot of money.
Yeah, it was, and how I ended up getting into real estate was I saved all the money. So my parents are both teachers, and so they had like a saver mentality, and then they had pensions, but then they also invested in the stock market and saved. So when I started making this money, I already owned a car, like $1,000 Pontiac Bonneville.
There you go.
I love it.
Or Ford F-150. I forgot which one was mine. Actually, we had it was either my dad's or mine. I'm not sure when the
there you go.
Started. But so I already had a car, and then I didn't waste the money. I started just looking at what I could invest in, and so I started investing in mutual funds in the stock market first. But I didn't really like how that was going. It was just over the course of a summer where I played baseball until my senior year of high school, and then so I was just all summer just playing baseball, selling items, and reading about investing, getting books from the library and stuff. But yeah, I really liked real estate, how it sounded. I was reading a book called Investing in Real Estate by Gary Eldred.
Yeah.
And he had this real simple breakdown on how you make money with cash flow, with paying the loan down, appreciation, the tax breaks. Like it was, the light bulb really went off for me when I was hearing about the appreciation example.
Yeah.
So he had like an oversimplified thing in there where it was you put 10% down, and let's say it goes up 3% in a year. Yeah. That would be a 30% return on your down payment.
Right.
Obviously, like now we all know here, like it's a little more complicated than that, but
a little bit.
But that was a good, like, kind of just, hey, this is how it could go,
right,
kind of thing, and opened my eyes up to it. And then, I'm from the Milwaukee area, and I was already going to go to the University of Wisconsin in Madison, and so I thought, all right, you have to live in the dorms your freshman year, but then my freshman year I'm going to buy a duplex, and then I'll move in it for my sophomore year. I'll live in one of the units, rent it out to the other bedrooms to a couple friends, and
Nice.
then rent out the other unit. And so I did that. So I got a realtor.
Sick.
I bought my first place with my own down payment. And then was off and going. I bought another duplex later that year.
Yeah.
Then a 3-unit, then
I
another
mean,
3-unit.
you were the only freshman in college doing that.
I know
Yeah.
that's so crazy,
Right?
dude.
Yeah.
I mean, where do you think that entrepreneurial thing and drive came from? Because both your parents were teachers. By the way, my mom has been a teacher for like
Okay, nice.
40 years.
Yeah.
Yeah.
Yeah,
So,
nice.
Kindergarten.
but like, where were you exposed to it, or is it just like an internal drive that you like
You wanted
more,
more,
or what was that?
yeah.
Yeah, internal. My parents, they had really good messaging in terms of just mindset, especially my dad. Because I was thinking about that when I was in Hawaii, because he had said something about waves and the rhythm of life, like that kind of.
Oh, I love
Oh,
that.
nice.
Yeah.
And so, they all, whatever you wanted to put your mind to, you could do. And then too, I would see my parents, all their friends were teachers or more like in like a service industry. So my dad was a shop teacher, so tech ed. So a lot of his friends, they owned like auto body shops or had like a woodworking or stereo type business.
Right.
So I didn't really, I guess those were the only entrepreneurs I saw. But then, I was just a kid. So like we would meet up with this friend of his who had the body shop, but we were meeting up to go like boating, not to like talk about business. So I don't know. So just internal. My grandpa on my dad's side was an entrepreneur, but I never met him. He had died of a heart attack when he was in his 50s. So I wasn't born yet. But they did say I was like him.
Yeah.
But I don't.
Yeah.
Unless it's hereditary, I just came from within.
Maybe it is.
I mean, I think it's a little bit of both.
Yeah.
A little bit of hereditary, a lot of bit of nurture, like what you said, when your parents always instill the positive mindset, whatever you put your mind to, you can achieve. So I think it's a little bit, my opinion is it's a little bit of both.
Yeah. I mean, I always think back to like for us, because I got started a lot later, and I'm always like, I wish I started when I was in high school or college or whatever it is. You did that,
Right.
so
Yeah.
you're not the norm, right?
No, you're
and
not.
so I'm excited to see where you have gone and grown from that first duplex you bought.
So you kept buying duplexes.
Yeah,
right?
the next one was a duplex.
Okay.
But also one thing, even if you had started when you were young, then you could think like I am, where I go, like I wish I was from a wealthy family now. Like where,
Right.
Like if
It just pushes
I had to
back
start
a
with
little
the
bit.
duplex, but what if my whatever dad invented Motorola or something, like I could have started with a.
So check
shopping
this
center.
out. This is how crazy. So my grandpa was super entrepreneurial, but he never took it to like the next level per se. He invented the tiki torch,
Really?
the freaking tiki torch, but then never took the next step to get it. What is that called? Oh my gosh,
Well,
I'm drawing a
license
blank.
it or get it in
License
every
it.
place.
Yeah.
Yeah.
So he just like sold it, and now look what the tiki torch does.
Where was he selling it though?
Well, he's born and raised here, so here, and then I don't really know where he sold it. But can you imagine, like,
I know.
if my Opa actually did what you were supposed to do with your inventions?
Yeah.
Yeah,
Yeah.
Sort of a licensing
Totally.
deal and get that in.
Bruh.
Isn't that
Everywhere.
crazy?
We wouldn't be here right now.
No, we would be super, super, super rich coming from a rich family.
But yeah, so yeah, the first deal was a duplex. Then the next one was a duplex.
Okay.
Then I bought. Then I had sold the first one. Mm-hmm. So first deal I bought for $220,000.
And this is in
Madison.
okay,
Wisconsin.
okay.
And then so I moved in like I was planning on. So I did my plan, and then I rented out the upstairs, rented out the bedrooms. The next one was just a rental. I didn't live in it. It was another duplex. Then I bought a 3-unit that I didn't live in that one either. All these deals, it's funny now, like because I guess even technology has advanced a lot since 2005 and 6 and 7 when I was buying these. But like the second deal, I bought out of a newspaper ad.
No
And
way.
then, yeah, and then the third and fourth, it was from a for sale sign in the like someone's yard.
Just
With
like a bandit sign for sale by owner.
Yeah.
like one
A
you buy
FSBO.
from
Yeah.
Home Depot or something.
Yeah.
That's
dude.
crazy. So you business seller finance still. Or
That's
for
crazy.
sale by
It's just
owner.
for sale by
Yeah, for
owner.
sale by
Yeah,
owner.
he didn't end up financing anything.
Yeah.
But it's 2006 and 7, so it wasn't like hard to get a loan.
Right.
Back then,
Yeah,
right?
that was a great time, right?
Yeah. Although I did have income from the internet business, so I didn't need to do like a higher interest rate.
So you could qualify for all this stuff. So were you teaching your friends in college how to do all that?
I mean, this is what's also interesting. So yeah, everyone that I would have known growing up, they all knew about the internet business, and everyone in college buying properties. No one
was interested.
Jumped in.
No one did anything.
Yeah.
What about now? Do any of your college friends be like, dude, I wish I did?
No, they might say they wish they did, but no one's jumped in.
That's crazy.
The first person to sort of jump in with an idea was so to kind of continue through the story here.
Yeah.
So I had those 4 deals that I bought in Madison. Then I graduated and I had already invested all my own money.
Yeah.
I never thought about raising capital or anything. So, then I got a job at a large real estate company. Figured why not? It's 2007. This market's slowing down.
Yep.
Why don't I just learn from some of like the bigger players? And
Right.
so that's what I did. And one of the interns there, his name was Brian, and he's like, let's go talk to my dad. We could go maybe all buy property together.
Nice.
So I didn't know what we should be looking at, because again, with parents as teachers, we might be buying duplexes together or shopping centers. I don't know.
Right.
So,
Right.
so we met up like the next day for lunch, and I printed out a bunch of deals. They really liked this $3 million shopping center in a really nice neighborhood in Minneapolis where we were all living. And we ended up buying that deal.
No
And
way.
The dad
That's
put
crazy.
in a $500,000 down payment. And
what did you bring to the table in that partnership?
Yeah, I had the deals and the experience.
Oh, okay.
Yep.
Yeah,
Okay.
and so on that, and I had already invested all my money, so luckily he wasn't even looking for a
Capital.
cash co-invest where we didn't charge any fees. So sort of the trade-off was like, all right, if we don't put in any money, then no fees, and then let's have like a simple profit split, where we just split 80-20.
That's
Crazy.
great. Do you still own that commercial property today?
Yeah, and that's the thing because we didn't do a preferred return on these early ones, and so like then was not like an incentive like, hey, this did well the last 3 years, let's sell it,
Right.
Because it wasn't like I was charging fees or wanted to keep it or any like weird incentives. So then we still own that one, and then
Sick.
a lot of the deals we bought back then, like a lot of deals I've owned for over 10 years with them.
That's amazing.
Wow, that's crazy.
So they're one of your longtime partners to this day.
Yeah. So then like how we did it was then the dad put in the money, and then if needed was also sign on loans. And then I was finding the deals, and then depending on where they were, either me or the son would run them. So I had moved, so we started out in Minnesota, but then I moved to the Chicago area for a different job. And then on the deals we bought in Minnesota, the son was doing the day-to-day property management, the asset management, the accounting. And then on the Chicago deals we bought, I was doing the property management. And then eventually we hired some people for property management in Chicago. But
Sick.
that was kind of
That's
the...
so cool.
So
Well,
that was like mixed use retail commercial space.
It was actually just a 2-tenant retail deal.
Oh, nice.
So no mixed, no different uses on
Right,
it.
right.
Just a small shop retail deal, the first
Cool.
one.
Yeah.
The second one was also a small shop retail deal. All like a similar profile, and not too different than today, other than the cash flow is really low today. So back then, our thesis on what we invested in was, let's try to find deals where the rents are at market. And then we can, so we're not paying where the rents are inflated, let's say. And because that was a real problem back then, because if, let's say, a lease got signed in 2006, by 2009, rents had dropped a lot.
Yeah.
So you want to buy in the 2009 rents. And then if you do that, the cap rates were on retail deals 8-9%. You could borrow 5 or 6%.
Yeah.
So cash on cash was like 15%.
Yeah.
So our thought was like, we're getting paid to wait.
Yeah.
So let's find stuff where it's at market rents or below market, and longer term leases, 5-7 years, and by the time these leases roll, we'll be in a better economy.
Yeah, that's crazy.
And I think you can use the same strategy today. The thing that's different is with where cap rates are and interest rates, there's not much cash flow.
Right.
Yeah.
So you're not getting paid a lot to wait. But in most of the places that we're looking at deals, and I'd be curious what it looks like in Hawaii, but it's there's not going to be a lot of new building starting basically now because of how high interest rates are.
Yeah, no one's building.
So then in 2 years, the market's going to look so different from like a rental supply and demand standpoint.
Right.
It's going to be a good market in a couple of years.
Yeah, I 100% agree. What's crazy is you started buying in 2005.
Yeah.
2005, right? So everyone knows what happens in 2008.
2008,
Were you
yeah.
guys affected at all? And if so, how?
Yeah, Yeah, I was, and fortunately, and then someone had asked if this was my strategy, and there's when you're starting out, there's not much strategy.
No,
it's
you're
like,
just balls
You're
to the
just
wall,
doing it.
going.
Yeah.
yeah, my strategy was find something that seemed like the gross and multiplier was fair or below what it should be, and that was cash flow positive. So, because sometimes they're like, oh, student housing, that's recession resistant. Were you foreseeing a pullback financially? And then wanted, and it's like, no.
Yeah.
I was a student, so I bought what I knew.
You buy it.
That was a strategy.
Yeah.
But yeah, that was. So I was on the standpoint of the values of the deals that I owned fell. So I had owned, let's see, the first one I bought, I owned for a year, and then the third one I owned for a little over a year as well. Both those deals I did well on in terms of like one I bought for $220, then sold for $270.
Yeah.
The third one I bought for $650, sold for $780.
Wow.
It would have sold for a lot more, but the market was already falling.
Yeah.
Right.
So then, like the remaining ones, I had the decision, and people might, if it's the same as now, they're looking at it and they go, okay, if you bought something in 2021 or started 2022, now the values have fallen.
Yep.
And so you can sell at a loss, or you can weather the storm and come out on the other side.
Right.
So I did that on the other two deals. And because I remember on one of them, I got a broker price opinion, and I could have sold it, paid the commission, and then lost all my equity, but paid the debt off. And so on that deal, so I had paid $670,000 and then put about another $30,000 in, add finishing out a basement, and just I guess the 30 was for finishing out the basement, adding more bedrooms to the building,
Yeah.
student rental.
Yeah.
And just fast forward to 2017 when I sold it, I did a lot of improvements along the way, but I sold it for $1.22 million and was all in for $700.
Nice.
At a time where I could have just made no money on it.
Right. Could have got out of it.
The debt,
Yeah.
But you weathered the storm, you hung on to it, and then
Yeah.
Yeah.
that's it.
And so where I was sort of fortunate, if you will, is I'm in a product type where the rents I don't think they ever went down because of the recession. It's student rentals, so like they were steady.
Yeah.
They weren't exploding up or anything, but they were steady. And then too, the way I had financed the deals, I never did any of the higher interest rate, like stated income loans, or the negative amortizing loans, which are really popular then.
Right.
I just did normal, 5-year ARMs or 30-year fixed
Traditional
type of things.
financing.
Yep.
Yeah.
But then what happened was, since when my loan went to reset on the interest rate, we're in a recession.
Yeah.
Interest rates were super low. My interest rate started going down.
Wow.
So then in terms of, just because you have an ARM doesn't mean your rate's going to explode. Like if you had a adjustable rate now, it's up, but in 2 years it's going to be lower.
Could be lower.
So
Yeah. Yep.
I feel like there's so much to unpack there. Okay, so first question is, you went from basically single family, duplexes and whatnot, into commercial. How did you know how to underwrite commercial? How did you learn about commercial? You know what I mean? Like that's a different transition. So tell us more about that transition.
So, I'm just a big believer, just kind of learning by like observing, so like a lot of this I was learning on the fly on the bigger deals, but I do want to, I guess I should point out, we never had any classes or anything like here's how to actually do a deal.
Like mentorship kind.
But I do have my degree like from college is in real estate.
Oh, nice.
But what you learn is like there's a valuation class, there's a finance class, but it's school. So it's like, what's in your finance class? It's like the formula for the weighted average cost of capital.
Yeah.
Formula.
Yeah.
Right.
Yeah.
Which if no one's heard of that, basically it's like if you have two mortgages, you just multiply each one by like what you owe in the interest rate. And then you like, you put it together and have one, like your blended interest rate. So
Right.
they make all these things that are kind of simple. Like here's like, it's almost like it's a calculus class.
Yeah.
But so I did know, quite a bit from those classes or from just, the speakers that would come to school. But really like it wasn't that different than the apartment deals I was doing. You have two leases. There's CAM and tax reimbursement, so you need to understand those. But I mean, I was brand new to that. So like we had two leases. I read every word of these like 50-page leases,
No way.
maybe more than once. Like where I really studied it, but it was simple to like underwrite because you have base rent. They're reimbursing your expenses, and then you have preset rent increases in these leases. So, you're basically your underwriting. It's like I'm calculating the cash flow based on the loan we're going to get, which is a fixed rate loan. And then we have preset rental increases. And then, maybe project what you're going to sell it for at the end, So it wasn't too tough to,
I'm sorry.
It wasn't too tough to underwrite, in my opinion. And again, we were focusing more on the cash flow, than anything. So it wasn't like our investor wanted to know what's the IRR or, like a.
And then that's my next question is how old were you when you went into that partnership with
22, I think.
So how did you get a millionaire to trust a 22-year-old kid?
Yeah.
You know what I mean?
Yeah.
And become a partner to this day.
It's because of the activity and like where I had already done 4 deals.
Yeah.
And so I guess I never asked him. Maybe I should. But I think he would say a couple, like I was already doing something so he could just kind of.
You had a track record.
get into that. And then as funny as it sounds, his son, he was an intern and like a year and a half or 2 years younger than me. So where I was a full-time person there. So even though I would have been 22 or 23, I seemed a lot more experienced.
Yeah.
I'm like his boss.
Right.
I've done 4 deals. I work at this big apartment company.
Yeah. No, I love that. I love that.
So which is kind of funny though to think now in retrospect where it's like, but the experience was like, I've been working there for 5 months.
Well,
like,
right.
You're the epitome of age is just a number, and being self-motivated and self-driven, you can accomplish a lot at such a young age. Because when I was 22, I was running a nonprofit too.
Right.
You know what I mean? And like building a business on my own. But did you find that it was a little harder? Maybe not because you're a dude to get taken seriously at a young age?
Well, no, because what happened was, because someone asked me something similar about like, how did I get a realtor to take me seriously?
Yeah.
And I swear, and they asked me like 2 months ago. I never thought of that in my entire life till he asked me.
Wow.
So they probably just picked up on this, like this guy, sure he can do it. And
confidence.
Well, confidence goes a long way.
And I was, because some of this, it's not that complicated. I don't think, where it's like, okay, a lot of people buy houses, obviously. More than half the country eventually at some point in their life buys a house.
Right.
I'm buying a duplex. Like, that's how much harder is that?
Right.
That's how I thought.
Yeah.
And I have the money.
Yeah.
It's not like I'm getting investors or need to do anything.
Yeah.
I have the money, and this house is for sale. Like, I want to buy it.
Right.
Yeah.
So I didn't really overcomplicate it. And the shopping center thing was the same.
Yeah.
The same thing. One thing that it would have been maybe harder to buy that first deal if the market was more competitive. Where now you have to convince the broker like to take your offer even though you've never done it before,
right?
Yeah.
Or something like that.
Right.
Yeah.
But it was 2009. We were the only offer.
Yeah.
So,
Yeah.
So at
That's
least I didn't
crazy.
have to convince the broker of anything.
Yeah. Right.
And my investor, he was a business guy, so he could kind of look at it and go, one of the tenants, it's Verizon Wireless. It's, they're a $20
they're
billion
good.
company.
Yeah. They're like your flagship tenant.
Yeah. And then the other one was was a tanning business. It's a high-end tanning place, Dark Tan, that got bought by Palm Beach now. But so that was the
Super
first deal.
interesting.
So it was kind of a simple deal also. Like it's an existing property where
Right.
the returns are high.
Well, you knew your stuff too. You had analyzed it. You knew what you were talking about. And again, I think confidence goes a long way.
Yeah, 100%.
And something else that I do, and I didn't realize it until I saw other people doing the opposite, is if I don't know something, like I just say that I don't know and I'll go get the answer.
So authenticity.
You don't make like you know it.
Yeah,
because that never works well.
Yeah, because I see people doing that where they're giving some answer where it's like, I know they don't know
It's like gray, very
what I
fluffy.
just said, but now it would be rude to be like, hey, I could just explain that to you if you want.
Right,
Yeah.
Because
right.
they just
Yeah.
said they know, but
Right.
like they obviously
Yeah,
don't.
obviously don't.
So I've never done that in my whole life.
Yeah.
I would
I love
just
that.
ask,
Me
how
too.
does it work?
Yeah, I love that.
I'm very
That makes
similar
sense.
because ignorance doesn't mean stupid. It just means lack of knowledge, right?
Yeah.
Yeah.
So I mean that's so that's how we got going.
Yeah, it's so cool. Do you think you would have ended up in the commercial space so quickly if it wasn't for that?
No, definitely
Yeah.
not.
Okay.
Yeah.
No, because I mean, I would have been doing the next. If I didn't meet them, the next thing I would have done, I probably would have like house hacked a place.
Yeah.
Yeah.
Where
Yeah.
because I had already invested all my money, but I could have rounded up like a 3.5% down payment, done like a FHA finance deal.
Right.
And
Yeah.
that's what I was looking at. Like, okay, I have a job, I can get a loan easy now, and then like I'll like buy a 3 or 4 unit. That's what I was looking at.
Nice,
Yeah.
nice.
And then I came into them.
Nice.
So yeah, that was fortunate, and definitely was like a catapulting thing in my career for sure.
100%.
Okay, so we went from commercial, and how did we get to 200 million now
Yeah.
in multifamily?
Yeah, so that's really what. So we, the three of us, we bought about $100 million of property from 2009 to 2019.
10
Wow.
years.
And
Yeah.
the dad invested less than 10 million, but it was, because you think 100 million, okay, you needed 20 or 30 million down.
Yeah.
Yeah.
But it was just, we bought that first shopping center. I guess a good example of how we grew it was with the second one. So we bought it for like 2.1 million, sold it 4 or 5 years later for 2.7. Then we did a 1031 exchange into a $6.5 million apartment building.
Wow.
And then those cash flowed the whole time. And so either, buying and selling and then rolling into bigger, or we, including, 13 of the apartment deals and 2 of the commercial, I did full cash out refinances of all the equity.
Yeah.
Yep.
So every deal was the same. Like we know the rents are low, or we can renovate it. And only, I think, 1 or 2 we renovated. It was usually just the rents are low, buy it, raise the rents, refi out all the equity with a Freddie SBL loan.
Nice. Nice.
Yeah.
So it was really just a ladder.
Yeah. So in just doing, most all the deals I bought from 2009 to 2019, or actually, all of them were between $2 and $6 million. So it wasn't like we just bought like 1 or 2 big deals that got us there.
Yeah.
Yeah.
Which is kind of the path that I feel like we're going to take. We're not going to take just, let's buy 500 units one time. You know what I mean? I'm more interested in like slowly working up smaller deals. 1 to 10 million, just working your way up.
I also feel like that jump like right away to like a 500, that's very difficult. Like you guys bought a bunch with that partner.
Family, yep.
And where did it go from there?
Yeah, so in 2019, Brian passed away,
Right.
and so I sort of was like, I did have to do a reset. Like I was just planning on doing deals with the 2 of those guys forever.
Right.
Forever,
Yeah, because the dad, he's like almost 70. Like he's not going to want to be as active as 2 30-year-olds, obviously. So
Right.
So then I had told my story, what I had done, like just to everybody who, when they say, what are you up to? Like I bought a duplex, internet business, like just, said this thing thousands of times basically.
Right.
Yeah.
And so in one time it worked out and I got this, family to be interested. And
100%. Yep.
But then a few years before Brian had passed away, I was leasing one of my apartments. And in Chicago, like sometimes the tenants, they have brokers of their own. Let's say you're from out of town and you want advice on where to live or to like set up tours of deals.
Right.
Brokers are involved, and then they get a part of they get a commission.
Yeah.
And anyways, one of the brokers was this guy who was interested in buying property and kind of quitting his job as well. So honestly, one of the only 2 people ever interested was Brian, and this guy's name was Sam.
Wow,
And then,
that's crazy.
But the thing is, when Sam was talking about what kind of deals he wanted to buy, it was like sounded like there was like quite a bit of like cash there, because he's like, I'll buy this 6-unit maybe, and we'll renovate it. We can do it all cash. And in Chicago, this is like $1 million
that's
deal.
a lot.
Yeah.
Yeah.
Big deals.
Yeah.
Yeah.
So I'm like,
Hawaii.
where's the same thing. It's probably more. It's more money here.
Yeah.
And they were and I'm like, well, where does the $1 million come from?
Yeah.
Right.
And he's like, well, my father-in-law, he could just throw it in. It's no big deal.
And you're like, okay.
And I was like, well, you could actually make more money on the $1 million if you bought like a $5 million building and made it worth $6 million.
Right.
Yeah.
Like that's easier to do. And then you turned your $1 million into $2 million.
Right.
Versus buying something for $1 million, renovating it, and then maybe sell it for $2 million.
Yeah.
You don't make as much, and that's way.
Yeah.
It's a lot more work. It's more risk. Like,
Yeah.
it's,
Exactly.
Let me know if you want to like ever do this. And then we started talking more once Brian had passed away, and then we basically did the same thing. Just the 3 of us, me, Sam, and his father-in-law.
So good.
Bought about $100 million of property in between 2019, 2020, 2021.
Wow.
So
That's
that
amazing.
one, that's again, it's sort of like a maybe like a mindset thing.
Yeah.
We had a deal that was, and I had never looked at deals this big before, but we had a deal that I liked that was $45 million. So that was one of the deals that I showed his father-in-law, and his father-in-law was like, "Looks like a good deal. If you can get it, let's do it." And that was a $15 million down
And you're like,
payment.
Wow.
I know. And I was like, this is crazy.
Yeah,
And I was like,
yeah.
all right, let's see. It ended up going like above what we wanted to pay that deal. But he was like, I said I would do 15. So I'm I'd still do it.
Yeah.
Wow.
And then we ended up buying different deals.
Yeah.
And
Yeah.
I have to check what he invested. Ended up being
Yeah.
more. Ended up being more than 15. I think the first couple, he was like, I'll just lend you some money on the equity. Let's, just keep it simple.
Yeah.
I didn't know what he thought. Maybe he thght we'd just like lose it or
Lose
like,
it.
we're running into trouble.
Not
We're
going to give it all to you.
Yeah,
We'll
Yeah.
just give
Let's
you
see.
a little
Let's test
piece
the waters first.
Yeah, or at least also he wasn't even like, I don't even need to be on the equity side. I'll just lend you some money and just go do it. Kind of thinking like, and I know everyone I think he had lent money to before. There was like, oh, I got a problem with the restaurant that has opened, and like he never got paid back. And so on this, he's getting paid back on time, and we're telling him like, hey, we're actually doing better than we thought.
Like this.
And he's like, didn't want to be lending us money anymore. He wanted to be.
He wanted
wanted
equity.
in on it.
Yeah. He wanted to partner. Yeah.
How was it for you the first time? Because I feel like, especially in Hawaii, like a lot of the misconception is you can't do deals because it's very expensive to do deals here. And then you said, I really like this deal, $45 million. How was that for you jumping from, I don't know, maybe 2 to 6 million all the way to 45 million? Was it like, did you ever have a thought like, oh geez, this is a lot of money, or maybe I can't do this, or you're just like, I'm going to shoot my shot?
I didn't think I couldn't do it, but when we wrote up the LOI and sent it, I was like, this is a big deal. This is crazy to be in the running on this. And it was funny because the brokers that had that deal, like that were selling it, they normally sell much larger assets. So when we toured with them, they're like, 45 million. This is like a family office individual buyer size, which
and you're like, what?
Who are these buyers that you're talking about?
Yeah.
But they literally sold like a $300 million
Hundreds
deal.
of millions, yeah.
So they thought this was like a mom and pop size deal for maybe like a guy in a 1031.
Yeah.
So anyways, if it was
Yeah.
a different broker, they would have.
So it helped you.
Yeah.
So that was, the brokers thought we were the type of buyer needed. Because if you call Blackstone or something, they'll be like, they'll
laugh
too
at
small.
it.
This is rubbish. Yeah.
But so it wasn't really, the only difference was that would have been the first property that I would have bought that had staff at it. So like the underwriting was a little different on the expenses for,
because you had to factor in
for
other
payroll,
stuff.
for having an on-site manager and maintenance person.
That's crazy.
That was about it. Yeah.
What advice would you give to someone that is starting to get into multifamily and is starting to look at bigger deals, but has that fear of like, I don't know.
Yeah. It would be one thing where it should be relative to the rents. So, if the deal's bigger or the price per unit's more and the rent's also higher, like it's not any different than what you're buying now. It's one thing if someone's buying something and it's like, I don't understand how these deals work. It's like a 2% cap rate because they're in New York or something like that's different. But it's the same as what you're already doing. It's just bigger. It's more.
It's just another zero.
Yeah, it really is. So
Yeah.
it's. I wish I had some better advice than that. But
No, that's the truth.
Yeah, it's more just in your head, and
Yeah.
then the harder part though is usually putting it all together. Where, like, if the broker doesn't think you can pull the deal off, then you got to convince them. Or if you're, if you've never got a loan that big, there are like practical hurdles, but that stuff you check with everyone ahead of time, check with the lenders and see, is this something that we could get approved? Because depending on the loan size, like for example, that loan would have exceeded, normally what we were doing is our investor was never signing on the loan. Even on the non-recourse carve-outs, like after the initial ones, the Minnesota investor was, but then later on they weren't. But usually the lender wants a loan that's equal to or greater than the key principal's net worth.
Yeah.
Right. So then that loan amount would have exceeded me and the son-in-laws. It would have been like a $35 million loan amount, like our net worth.
Right.
So then that we would have needed to. So we need to ask more questions and then go, then what do we do? And and then so I had to explain to the father-in-law on this one, because it's so big, we'd have to somehow involve you in it.
Right.
In some capacity. And so like there's some practical things to look at where if the loan is going to be greater than your net worth, then you'll have to come up with a plan for that.
Right.
Yeah.
That's why sometimes you see partnerships where some people, their role is only just signing on the loan almost.
Yeah,
Just the
100%.
sponsor,
Yeah.
basically.
Yeah, I haven't done any of those.
I was like, are you at that place yet?
No, I don't. Yeah.
Yeah, could you potentially sponsor somebody's loan? I don't know if you'd want to, but like, you know what I mean?
Is that something that you see in your future?
Probably not. I could do that, but it seems like I'd rather just focus on like what I'm doing basically.
Yeah, totally.
But that's interesting. I mean, that would be a good way for someone who knows not as much about real estate, maybe to get into like on the GP side. But we're trying to just do the whole thing still. Just find the deal, run it, get the loans approved, do everything.
Dude, I want to follow the multifamily path that you've done. You know, like you hear a lot of mentorships right now that are teaching on multifamily is start these huge syndications and buy these big deals. You know what I mean? And it's like, I don't have a lot of interest in doing that route. I want to do your route. You know what I mean?
Yeah, but those mentorships, they have like LPs already that want to invest. So like there's a reason they're saying go that way. Then their students can co-GP together.
And it benefits the
everyone.
Deal. Yeah. And
Got it.
Well, it benefits the whole mentorship and the whatever their whole ecosystem. If like our students can co-GP together, and then the people who realize this is more work than they want to do can be LPs.
Right.
Where if they just said, everyone just start with the duplex, then there's like nothing to do.
Yeah.
So it's also like that's probably why.
Is that the route that you're going in? Tell me about Breneman Capital.
Yeah. So I started syndicating deals too a couple years ago where. So like that, for if people don't know, that's just taking investors that, not these two people I had where they could throw in like 7 figures. This is taking in still accredited investors. Yeah. So people who are, still, making $200,000 or $300,000 a year or a millionaire, but usually they're investing 50,000, 100,000, 200,000 type of investments. Cause I did have some people I knew that would want to invest that way. No, like I was saying, very few were like, I want to do what you're doing. They were more just maybe I'd meet someone who's like, 50 and they're like, I already have like a couple million in the stock market. Like I want to like diversify.
I want to grow my money. Let me give it to you.
And so at that point I was telling them like, I don't have like a way to invest like that with me. Cause I'm just all set up with like one investor or two. And then I never mixed the investors too on those two families. It was always just separate. Like, I know what you want, I know what you want. And then that was how I did it. But then starting in 2021, I syndicated 4 or 5 deals all and then and then we also moved into Phoenix buying deals. So because everything was in Chicago and Minnesota up to this point. Yeah. But kind of 2020, 2021 was reevaluating what I was doing and thinking, okay, why don't I open this up to more investors and then also invest in better markets?
You can scale. You can do more deals, different kinds of deals, because now you said you moved to Texas.
Yeah, I live in Austin now.
Yeah, so now you're doing deals in Austin, Dallas, and Phoenix.
Correct.
But you still own all the other ones as well.
Yes. Yeah, nice. And so I think I like Chicago, those deals. I would still buy if I could find the same type where you buy it, the rents are low, from like a developer who rented it out in the winter. The one thing, there's a lot of seasonality in Chicago with the rents. No one wants to move around the holidays or when it's really cold out.
And we don't even know what that's like here in Hawaii.
I know.
Yeah. So that's just I don't know. If you have to move during like a monsoon or something, then
that's another story.
Yeah. There is a tropical storm heading here, but
I know
it's just a little rain and wind.
And they so if I can find those deals, I'd still love to do them in Chicago, but otherwise, it's the market, the whole time I was investing there, the rents were pretty flat, like market wide. And I was just creating the value with my business plan. So I think they, so what I want to do now is invest in the markets that have tailwinds that are top in the country for appreciation or for rent growth. Nice. So we took a lot of time to look at that. And, Phoenix has some of the highest rent appreciation in the country. Yeah.
Wow.
And also the most favorable to property tax laws. They have a 5% per year assessed value cap on the taxes.
Okay.
Even when you buy and sell, they don't change the assessed value because there's a transaction.
Yeah.
Right.
And then Texas, that's like Dallas, it's always like the number one job creator. It's really stable. A lot of the like institutional and foreign money that used to invest in New York and LA and San Francisco primarily, now they're trying to get into the bigger, Sunbelt cities like Dallas and Miami.
Yeah.
And so like Dallas is like a more stable version of Miami then, where in the GFC, home prices only went down 10% in Dallas.
Wow.
And only down 8% in Austin. So like that, so I'm there for the growth and the stability.
Yep.
And then in Austin's been the number one job growth city. One thing we looked at was it was like a trailing 5-year average for job growth. From from the year 2000 to 2022, Austin was number one for job growth. This is as a percentage, not total. Like, I'm sure Dallas had more jobs, but it's, 6, 8, 7 times bigger.
Right.
Anyways, as a percentage, job growth and population growth, that whole time Austin's number one. Wow. So like a lot of people think it's just like, in the pandemic, like Phoenix was booming and Austin, but actually really has been going on since like the coming out of the GFC. So 2012-ish, like around there, the number one markets for rent growth and prices going up were actually the Sun Belt. Before that, from like the year 2000 to about 2012, it was always it was LA, San Francisco, New York. Because I don't know if you guys ever look at like those market reports from the brokerages put out.
Yeah, of course.
But they have like, here's the best apartment market in the country, and they rank it.
Yeah.
When I was first starting, everyone for like the first 5 or 7 years, it was San Francisco or New York were number 1 and 2 always. Yeah, I know. And then but in about 2012 it flipped where and it hasn't changed. So I know everyone thought it's like, it's a pandemic and this and that, but it's actually been going on since 2012
for a lot longer than what people think.
Right.
And I didn't know that until 2021. So I'm going, okay, wow, this has been actually happening for 10 years. It wasn't just because of whatever, people working from home.
Right.
And so then that's when we made a big pivot. So if anyone wants to invest with us, you can just go on our website, breneman.com, sign up.
Love that.
Get sent deals.
All accredited.
Yeah.
Right now. Okay.
Yeah.
Cool.
With the way the rules are, like if you're gonna talk about your business or your deals
At all. Yeah.
publicly at all,
Yeah.
you need to do verified accredited.
Yep.
So not you. It's more than just like checking a box too, because where
you guys use like a third party service that
verify
verifies.
investor, verify now, something like that.
Something like that, yeah.
And then but it's really easy. Like a lot of these people that have invested, they just have a W-2 that says more than
that they
200 or 300 grand, in it, and they just need to send that in. It's not
awesome.
complicated.
So I have a question for just like more tactical stuff. Like, how are you finding these deals?
Yeah. That
And
seems
what
to be a
is
strength of yours.
Right, exactly. And what does your team look like right now?
So for finding the deals, most of the deals I bought have been off market. So 80% of the deals I bought have been either off market, like direct to seller, but been very few of that. It's mostly all been off market and through a broker.
Got it.
And I guess the 80% number, because when we redid our website, I counted it up, but 80% either off market or repeat seller or situation. So
right.
Because that's also one thing that I've done is I'm easy to sell buildings to. Like I'm not nickel and diming people like when we do the physical inspection or looking at the leases.
Yeah.
If you told me like we have a new roof and then it's not, and it's like
It's a
You're gonna call them out
20
on
years
that.
old,
Yeah.
like
Yeah.
now, okay,
Yeah.
I assumed the roof was new, so now I need some roof money. But other than like those kind of scenarios, I don't ask for anything.
So you're the easy button, just like when we buy houses from single family people, we're the easy button.
Yeah.
We don't nickel beat you up during an inspection.
Yeah, and so
Yeah.
it's nice for when you're doing multifamily, like with a house, probably that's their only house. But on multifamily, maybe they have 10 of them. Like
10
and
buildings.
now they're happy with how you performed on that.
And they're ready to liquidate the others.
Yeah, and that's you can keep being the easy move for them, and because actually the guy that I bought that when I said we sold the shopping center, then bought a $6.5 million apartment deal in Chicago, that was in 2014, and then in 2020 he was selling all his Chicago buildings and moving all the money to Denver and Salt Lake City.
Yeah.
But he had one deal he bought for this is maybe like 800 grand a long time ago, and he signed it to us for 4.4 million. And so he was concerned with like being able to do a 1031.
Yeah.
So he left a little bit of money on the table, and we did a 90-day close, and then he had the option to extend it another 30 if he wanted.
Nice.
But we got a good price, and it's again off market, but through a broker.
Yeah.
Even though we bought from that guy again, that was 6 years ago. We hadn't kept in touch with him like the broker had.
Yeah.
Because that's the thing with our these multifamily deals. I would say I don't have the exact stat, but like definitely more than 90% are sold with brokers.
Yeah.
So it's not, there's less direct to seller or people have realized you get more money selling through brokers. And so sometimes, so there's usually a broker attached to these deals, but oftentimes you can get them off market because they know you buy that type of deal.
Yeah.
Back when loan assumptions were a negative, so in 2019 and 20, I did 3 loan assumption acquisitions.
Nice.
And I did one in 2018 too, I guess.
Oh, wow.
But those were because those brokers knew that I had been doing Fannie and Freddie loans. So then when they had someone say, hey, I have this loan that it has a $3 million yield maintenance prepay, so I need someone to buy it with the loan.
Yeah.
They're like, okay, this will be tough. Your
This guy
rates,
can do it.
your rates at 4.5 right now. It's a horrible interest rate, and then, but let's see, this and send it to me. And, so we were picking up deals, on the cheap because they had interest rates in the 4s. So
that's super cool.
So
and now you're
like, I know it's funny how things change.
Isn't that funny?
So
and I've heard that before, that brokers rule the
Commercial,
multifamily space.
multifamily.
And so how was it just through like relationships and track record that you started forming these relationships with these brokers?
Start relationships with a broker? How do you get taken seriously by a broker? You know what I mean? Like, how did those conversations look?
So, I mean, the first step. So when you're brand new, it's where you're not over promising or like puffing like you're this big.
Everything.
Here. Where I just always explained exactly what I was doing. Like where just there was no exaggeration. It was. Or like the first Chicago deal, I don't know the broker at all. And what are you doing? Oh, I'm going to get a Fannie Mae loan, and my investor is one person, someone I've done at that point 6 deals with.
Right. Yep.
Like that would have been my answer.
Right.
Like, so you understand what's happening, not some opaque, complicated thing where you don't really.
Yeah.
The broker's like, I don't understand how these guys are going to close this thing.
Right.
Because I've asked that when someone's looked at when I've been selling, like, how are you going to close? Where does this person get all the equity and debt from? And then the broker's like, I asked, it's kind of not, it's hard to tell.
Yeah.
You never want to
And
give
how
that.
confident are you in that person is going to actually close if they can't even explain exactly that?
So I was doing that at the start. So if someone's brand new, I'd recommend doing that. And then too, I was already familiar with all the terminology and stuff, just from doing other deals and, probably somewhat going to school for real estate as well.
Yeah.
But I was working full time in it. So there wasn't anything that a broker would say to me where I'd be like,
I don't know what you're saying.
Right. Because I was doing deals also as an employee.
So for someone that didn't go to real estate school, how do you recommend, or what would you say is the best way to learn about multifamily terms, how to underwrite multifamily deals? Like, how does someone start to go down that road?
Yeah, I think so. Just start reading books on multifamily investing. There's, just me reading that basic one, Investing in Real Estate, Gary Eldred. But there's a lot of other, it could have been that book or any other one. There's one, I think, by Peter Cook that has private equity in the title. I might just be getting the name totally wrong, but everyone says that's like their favorite book.
For multifamily.
Or just bigger real estate deals. It could be any product type, I think, in that, but just how people set up these bigger deals. One part of his name has Cook in it. It's easier to find if it's private
Google
equity.
it.
But I can figure it out later.
I still haven't read it. I bought it because everyone's like, you got to get it, but I didn't. I figured like I already got that info down. But like I think that I'd recommend with that, and then just get reps looking at deals, underwriting deals, because it doesn't, you don't need to, you can just get on the broker list and then start underwriting deals and seeing what makes sense, kind of just getting experience doing that.
Yeah.
And then too, if you have, let's say, no money and no net worth for getting the loan approved or anything.
Yeah.
I mean, I would recommend starting on smaller deals. So just like I was going to do in Minnesota.
Right.
Yeah. You can go get a FHA loan, 3.5% down. Doesn't work in every market. It's not going to work in a lot of these like really big cities, and may not work in
Midwest,
Hawaii, how expensive it is here.
Right.
Because they have county by county loan maximums.
Yeah.
But in most of the country that would work. And then, or there might be a local lender that can, do a lower down payment owner-occupant loan on a 1 to 4 unit. So that's how I would start. If you're just hell bent on getting into bigger deals, you're going to have to partner then, because you don't have money or experience. You would just be bringing like hustle at that point to the table,
just time and hustle.
You would need to have the deal and enough understanding to know this is a good deal.
Yeah.
But then you're going to need to have partners who can help get it closed, whether that's getting the equity or the loan approved or whatever.
Yeah. So then that leads to my next question, which is, how do you find money partners?
Yeah, I mean, for me, it was just repeating this story over and over again. And like I said, over, a 10 or 15 year period, it worked 2 times.
Yeah, that's so cool, dude. And I always tell people this, like, for us, it's important for people to be loud about what they're doing. I think oftentimes, especially in the beginning, it's a little bit hard because people are maybe don't feel as confident about it, but you never know where that relationship you're going to make that can change your life, right? Yeah. And so just repeating those conversations over and over and over, it might feel uncomfortable at first, but it's so important to do.
Yeah, I totally agree with that. And I think too, if it's also having the activity was a big help. Like I already had done 4 deals, or you had said called it a track record at that point. So then that's why I was saying, like, to start out, buy a duplex and go move in it and put 3.5% down. And then, because now when you go have maybe an 8 unit, it doesn't seem like just like a theory, like, hey, we could do this. And I took this, I've read 3 books on real estate investing. Do you want to invest $200 grand in this?
Yeah.
That sounds like a bad pitch compared to, I just bought a duplex. It's going well. Now I found an 8 unit.
Right.
Yeah.
Like that sounds a lot better of a pitch, right?
100%.
So that's what I didn't know any of this at the time, but like that's essentially what I ended up doing by investing all my own money first. Then when I did meet an investor, I had all this activity. I had a track record. I had a plan.
Yeah.
The deals were going well. I had sold 2 of them. Actually, at that point, no, I had sold 1 of them. But he saw like, okay, this guy sold it for 20% more than he paid on that one.
It's a good deal, yeah.
Yeah. So like, what if we could do that on this bigger deal? We'd all make like $1 million then if he could do that again.
Yeah.
Yeah.
So
super cool. So what has been your best deal so far? I know that's a hard question, but what would you like a memorable one for you that you'd kind of want to talk about?
Yeah, I think the one that I would probably want to talk about, or what I want to talk about, would be the 4th deal that I bought on my own. Okay. Just because it had that had a lot of elements of like that parallel today, like weathering the storm through that, where I bought it. Then the market dropped, but my rent stayed, pretty consistent. So I didn't panic. Like I held it.
Yeah.
So, what I benefited from that because it was a 5-year ARM, but with a 30-year loan term.
Yeah.
So I didn't have a maturity date, didn't have to refinance. So that's something I always think about now, where I only have one loan right now that it's a 3-year loan that I put on in 2021. Otherwise, everything else, it was like a 10 or 20 or 30
long
term. The fixed rate term shorter, but they all had like a floating rate tail
afterwards.
Yeah. And so the only property that's going to be a problem for me potentially is the one that I did the 3-year loan on, because if interest rates don't drop in a year and a half by 2024, we might have to do a cash in refinance on that.
Yeah.
Right.
But otherwise, all these other ones, it's like you just, so that one I weathered the storm. The 3 unit I bought, and so I mean that's one of my favorite deals. And
Love
then that one I made a lot of money on that. Where if you pay $700, you sell for $1,220,000. I mean that's $500 grand there on the price, but also it cash flowed for 10 years.
Yeah.
Paid the loan down a lot.
Yeah.
Then I did a 1031 with that into 2 6 units in Chicago that were 1.6 million each.
Wow.
So I put pretty little down in this first deal, and now I have what is that, $3 million of property. Then also I bought and then a year later, actually less than a year later, I refinanced out all the equity on those as well.
Dude,
so
that's crazy.
So just to kind of, now I'm jumping around a little bit, for the whole series of events. So I could have just sold when I was done and paid the tax. Instead I found 2 good deals next. And part of that's just about having deal flow, where I was already looking at stuff, and then both those deals I bought off market from a management company that I knew.
I feel like people making $500,000 on one deal is a dream for a lot of people. But then once you've done it, it's like, I want to do it again and again and again,
Yeah, and these are just like, what's crazy on that is what I like the most about that whole series of events isn't even the money that was made. Yeah. It was that to be able to buy something for $700 grand, sell it for $1,220,000, like that's like a big success. Huge. And took a lot of skill.
Yeah.
But when I bought it, I didn't even have all those skills to do that. But I learned a lot, where I renovated the basement and added 3 bedrooms down there.
Yeah.
And then over time removed all the carpeting in the bedrooms, put vinyl down, changed all the appliances to stainless steel.
Yeah.
And so I just, I was able to improve the property and kind of, just got better at running things. When I first was buying rental properties, I was the owner who was like, "Oh, hallway cleaning, you don't need that." That's And then I was having people, no exaggeration, because the student rentals, punching holes in the wall.
Oh no!
But I'm like, all right, if you're gonna punch holes in the wall, why fix it?
Right.
So I was I was doing everything wrong, really. Like, and then it's funny. This is where I learned it. I was listening to the book. I think it's called Blink by Malcolm Gladwell.
Okay.
And they're talking about, or it's one of the Malcolm Gladwell books, the broken windows theory. Where basically, like in New York, they cleaned up the subways by on like reduced crime by actually just enforcing like little infractions, like no more spray painting the cars, and no jumping over the turnstiles. If someone spray paints something, we're gonna clean it off actually. And pretty soon, like, crime was dropping.
Decreased.
Wow.
So I was like, all right, I'm gonna paint my hallways, fix the holes,
I'm gonna fine
hire
you.
a cleaning company. And what's funny is, put screens on every window, really like take care of this place.
Yeah.
And the tenants turned over that period of time. It went from just, basically guys will say like just,
rowdy,
bring in their, beer pong tables,
Party it up.
To then one year it's like it's a group of girls and they're hanging like signs on the walls, they like love and stuff. You're like, oh, it's really did a 180.
There's something about the environment, I'm telling you.
Yeah. So then it really changed the property, and then just to be able to like then okay, I'm going to sell, and then to 1031 into 2 good deals, then execute a cash out refinance. So actually just being able to do that, it was actually more satisfying than the money.
That's cool. Super cool.
What would you say your superpower is?
Yeah, I guess that's a good question. What's funny is I just think that I'm like a regular person who's doing it.
Dude, totally.
Yeah. So I would say it's going to be mindset then, where I would, one mindset thing I didn't talk about was whenever I saw, whether it was one of the people I work for or someone who was successful in business, I never thought like, oh, okay, like I couldn't do that. And I just would, I'd look at maybe where they went to school or something. And it was never like, oh, they went to Harvard twice. Like they got a MBA and whatever. They were also an attorney or something.
Yeah.
It's like, these were usually just regular people that just took a risk and went for it.
Yeah.
So I always thought that. And that was just something that was from within, whether that was just on my own or from my parents.
I love that.
That one, I don't ever remember my parents saying. They were more just kind of more like what I was talking about, like the rhythm of life.
Yeah.
You kind of, like you can do it kind of
You
thing.
can do anything you put your mind to.
And go
Like,
with the
yeah,
flow.
100%.
Keep going.
Yeah, my dad's thing that he said was you create your own reality. Like that
Love
was
that.
a big.
That's like the truth, Yeah.
Right. Like you could, just being on this vacation, like we're going to a wedding and there's like 3-4 dinner. There's a million things. And it's like a lot of, you could be stressed out about getting to these places, and we're in Honolulu, and like there's traffic and there's no parking. And you could, you could let this all ruin your trip, or you could, just sort of embrace this is what this
go with the flow
part of the island is like.
Yeah.
And,
100%.
Big time.
So so
Perspective.
yeah,
it's all perspective. But I think that's important because would you agree that real estate can be very stressful and it's super high risk, and so it scares a lot of people away, or they end up freaking out, going under, selling when times get rough. So I think if you're able to stay grounded and have that perspective of I can overcome this, there's always a solution, you get to reap all the benefits in the end versus freaking out and recoiling into a corner. You know what I mean?
Yeah, you're right.
Yeah.
This my girlfriend's family, they have a nickname for me now where it's Durable Drew. Because like nothing, I'm like
you're not affected.
Yeah, they're they're just stressful. We're traveling and this and that and
they're
the
like,
wedding.
whatever.
And I'm like, I'm not stressed. This is fine. Like where where people are freaking out and like I never am. And so I'm at least for work, like I'm seeing the bigger picture. Like the reason that I'm in that like that 3 unit I was talking about with the story, it's not I'm not getting mad if somebody punches a hole in the wall or a pipe freezes or whatever bad things happen to me over the years. That building had a fire. I mean, all these things happen, but I see the bigger picture, and because that's actually something that that my dad talked about that was like kind of was negative, where he had the only landlord experience he had or people he knew, it was all these horror stories. They bought a farm in northern Wisconsin and they rented out the farmhouse to somebody. It was just a nightmare. But it's like who you would get if you're renting a $300 house out in the middle of nowhere.
Yeah,
so it's a bunch of people who are worried about the government coming and getting them.
100% doomsdayers.
Yeah. And so he he just thought everything's gonna go wrong. But he would have just gotten stuck kind of like doing everything on the deal, like doing the maintenance and cutting the lawn. And, so even if he bought one, he would have probably just done 2 and been like, I don't have enough time to cut 3 lawns,
totally.
And then, that's, just seeing the bigger picture is,
eye on the prize.
Yeah.
Always.
What I would say about that.
Yeah. I feel like that's kind of a superpower too, is the ability to stay pretty even kill in super high highs and super low lows. Like I'm the same way, like nothing really phases me, but it's kind of just it's all right, it's good, like we'll figure it out.
It's a learned skill set, I think, for sure.
So
for sure. So if you could go back to the beginning, would you change anything? Would you do anything differently? Because it kind of sounds like no.
Yeah, I mean there's stuff you would do, but I'm happy with how everything turned out. Yeah, for sure.
I love that. So last question is, what impact do you hope to leave with the audience?
Yeah, I mean, I think kind of people who could be somewhere along like the journey that I have been on, and just could pick up some, tips or kind of seeing what I did and find it useful for them. I mean, just as simple as that.
I mean, I find it super useful because I feel like we're kind of at where you were. I mean, we have more than a couple duplexes. We have a pretty significant single family short-term rental portfolio, and we're trying to dive into, and we're taking a very similar path. So it's refreshing, it's encouraging, it's motivating for me to know that like, yo, you did this path, we can do the same thing. I don't have to go into these large fund-to-funds, all that stuff. You don't have to take that path that is very sexy and is being glamorized right now, especially on social media. You know what I mean?
Yeah.
I mean, even you had mentioned something about fund-to-funds when we were resetting, and I didn't even know. I think I know what you're talking about, but I might not. Like, I don't even. Yeah. I'd never.
Well, that's just what's taught, and like we went to a mastermind recently, and that was it's one way you could get into those larger multifamily deals is you create a fund off of a bigger fund, and then you raise capital, and then you can become a key holder.
Okay.
Yeah. We'll talk about it because I don't even know if it's even really a thing. Like, I mean, I know that it's a thing, but we were just like kind of told about it. Prior to that, we were like, you got to just get involved as an LP and then do a bunch of LP stuff, and then, maybe one day you get to be a GP on something.
Within that mentorship group?
Yeah.
Yeah, but you guys are already doing it. So, I mean, you just...
we just need to find a sugar daddy with a couple million you did. But it's just having conversations,
Yeah.
Big time. Yeah, it's super cool. I know I got a ton out of this, so I'm super stoked.
Last thing is the Breneman Blueprint podcast. What do you talk about on there? Like, are you teaching about multifamily? Like,
do you do any other education?
Do you do education?
Yeah. So, the Breneman Blueprint's my podcast. Yeah. And so, it's a real estate investing podcast. So we talk about, we have people that are real estate principals on, like myself, and lenders, brokers, just everything real estate. I've got episodes for passive investors too, breaking down what to look for in a sponsor or how the fees work, or
that's super informative.
What a 1031 is. So that's the podcast. And then people want to find me. I'm at Drew Breneman on every social media platform. So Instagram.
Nice.
I just made a TikTok too recently. So
sick.
What about Threads? Are you on Threads?
Yeah, I am. So I don't know what my handle is on that. So you can find me on Instagram.
All the things. It's so hard to keep up.
Yeah.
Well, but thanks for coming out on your vacation.
Thank you so much for being here. You guys, if you are into multifamily in any way, please go check out his podcast. Also, you're raising capital. If you guys are interested, please hit him up.
Breneman Capital.
Yep. And thanks, man.
Perfect. Yeah.
Yeah. We're good. Aloha, guys.